What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SPY for the S&P 500 ETF. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talk about this marketplace regularly. If we zoom in, what we'll notice is that we just have some boring price action here, just sideways, okay? And it may seem really boring, and I did use the word boring, but this is when you need to be paying attention to the marketplace. Generally, markets move from areas of balance to areas of excess. Okay, so when you get balance, the next assumed thing that would happen is that you get some period of excess, right? That's where these big directional moves are produced. And again, you want to be on alert here as we're starting to produce the balance, especially when they're so clean like this, where you have obvious levels of breakout and breakdown. So nothing has really changed. I mean, the breakout will still be produced if we can take out 450.75, call it 451. If you wanted to be even a little bit more conservative, just watch for the highs of this balance area in there. It's a little bit higher, right? 452 maybe, or the resistance trend line, right? That's coming from all-time high, first lower high, connected beautifully with it on the first period of excess here. If we break that, my target's going to start to become the 50 SMA and that 460 quarter mark coming from, if I scrunch up the chart, all of this prior congestion from right around in here and where the selling really accelerated from. So to me, that's the upside play to be watching out for here inside of the S&P 500s. If you were watching on an intraday basis, we basically had a day of balance inside of a day of balance, right? We were opening up inside of the overnight range from the prior day, just going completely sideways. And then we closed it fairly strong, right? There was a nice move to the upside, and we can see that on the 30-minute time frame here, the fact that we are certainly building an ascending triangle, right? I like to just call this a pressure cooker top. You can only knock on the door so many times, build so much pressure before eventually the level gives, right? So to me, that's kind of the scenario that we're being presented with here inside of the S&Ps. Please don't forget that there is still possibility for a look above and fail, right? There's always the opportunity for this to be a fake out. I don't want to write that off. So if we do something like this, get a really lackluster break, like the buyers don't immediately step on the gas and we don't see the tape speeding up, the ticks, the internals aren't looking good, then be wary of any move back down underneath the top end of balance for a look above and fail. Target should be the bottom end of the balance, closer to 443.50. If there's going to be downside, that's the way I would imagine that it does pan out. So it's a scenario that I'm at least open to and being willing to consider if the breakout doesn't look good. But as of right now, these higher lows, these equal highs, it does start to feel like the market wants to break out. So that's what I'm watching for. Those are the levels I'm thinking about. And that's all I've got for you in today's session. So if you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.